Brisbane's 2032 Olympics isn't just a sporting event. It's a catalyst accelerating major infrastructure that would have otherwise taken decades. But the games themselves aren't what make property prices move. It's what gets built around them that matters. I'm Gilbert from SuburbsFinder. I'm a property data analyst, investor, and a bit of a self-proclaimed data nerd. I've been tracking the movement of capital, population, and infrastructure into Brisbane for years. And right now, the data is showing some clear momentum in certain precincts, particularly those tied to infrastructure commitments that are now confirmed and fully funded. So in this video, I'll walk you through the infrastructure being delivered and which 12 suburbs are best positions to benefit and why. Since infrastructure is one of the factors that drive sustainable property growth, let's start with a quick overview of what plans have recently been finalized to prepare Brisbane for the Olympics. In early 2024, the Queensland government scrapped the Gabba rebuild, shifting focus to Victoria Park. The newly confirmed 63,000-seat stadium is now a centerpiece of decentralized Olympic plan that includes Bowen Hills Athletes Village, Spring Hills Aquatic Center, and upgrades across Chandler, Redlands, Logan, and the Gold Coast. We're seeing what some are calling a Queensland Olympics, but with the lion's share of high-impact infrastructure landing in Brisbane's inner north. Combine that with over $7 billion in committed Olympic infrastructure. The delayed but massive Cross River Rail project, now expected by 2029, and confirmed housing redevelopment of Gabba adjacent areas like Wollongabba and East Brisbane. Plus, with the chronic housing undersupply and record net migration, I can already see a suburb-level movement emerging. And this isn't necessarily just speculation either. The suburbs I am going to share with you are ones where infrastructure development is now physically underway, but prices still sit below those of better-known suburbs like Newstead, Paddington, or Tenerife. That imbalance between what's planned and what's currently priced in is what's driving increased interest and, in some cases, already visible price acceleration. And it's exactly this pattern we're going to unpack when I share the list. I use SuburbsFinder to identify these suburbs using 4 specific criteria. First, proximity to confirmed infrastructure. Second, lifestyle and connectivity, especially how the areas are being reshaped by new rail, green bridges, parklands, and how that improves access to key employment and education hubs. Third, urban renewal potential. And number 4, the Olympic legacy effect. History shows that host precincts often outperform in the medium to long term. Just look at Sydney's Strathfield, up 79% across the decade around the Sydney 2000 Games. So with that framework in mind, I'm going to break the list into 2 segments. 1, core suburbs tied directly to Olympic infrastructure. Second, mid-ring value suburbs with spillover potential. Let's start with infrastructure adjacent suburbs. First, we have Hurston. Why is it on the list? Well, it's right next to the new Victoria Park Stadium. But more than that, it's part of this big medical and education precinct. Vacancy is super low, around 1.6%, and it's actually got the strongest rental yield of all the inner city picks at 2.84%. So yeah, while it's not making headlines like the West End or Kangaroo Point, the data says tenants and buyers are paying attention. Second on the list is Kelvin Grove. This one's climbing fast. We're seeing over 9% annual growth. But what really stands out is the absorption rate, 45.5%. That means properties are getting snapped up fast. It's close to the Victoria Park Stadium site and right on the Brisbane Metro line. Oh, and don't forget, the Queensland University of Technology. So there's a healthy mix of student and professional demand too. Third, Spring Hill. Spring Hill is receiving a $650 million redevelopment of the Centenary Pool into the new National Aquatic Center. While recent transaction data wasn't in the top growth bracket just yet, this is likely an early cycle opportunity. Watch this space. Listings are tightening and proximity to the CBD and stadium uplift nearby could trigger strong medium-term growth. Fourth, Bowen Hills. Yes, it's getting the Athletes Village, but Bowen Hills is positioned near RNA showgrounds and has historically had strong commercial and rental interest. It's also a major transport junction. Supply has been tight and demand indicators are strong in surrounding inner north pockets like Hurston and Fortitude Valley, suggesting overflow interest will carry here too. Fifth is Fortitude Valley. While yields are moderate, investors are likely pricing in future access to the Cross River Rail and inner city revitalization. It's also benefiting from proximity to RNA precinct and potential transformation of the GABA corridor. It hasn't peaked yet, but indicators suggest buyers are positioning ahead of infrastructure completion. Six, we've got Wollongabba. Even with the GABA rebuild off the table, Wollongabba remains a Cross River Rail beneficiary and is adjacent to East Brisbane, Kangaroo Point, and South Bank. That proximity combined with low stock levels keep it relevant. It's also on the radar due to proposed urban renewal. Price growth may stabilize short-term, but the long-term positioning is still solid. Seventh is East Brisbane. East Brisbane is adapting post-GABA, but listing volumes are low and there's strong owner-occupier appeal here. The suburb offers access to Wollongabba's amenities without being caught in development disruption. It remains tightly held, making it one to watch for scarcity-driven capital growth. And 8, Kangaroo Point. Kangaroo Point is always a crowd favorite. The green bridge to the CBD is a big deal. But here's what the data says. It's got the highest absorption rate of any suburb on the list, like crazy high, and the supply is super tight. That tells us people want to live here. Even at the higher price point, it's one of the most in-demand inner city pockets right now. The next segment of the list is 4 suburbs that aren't directly adjacent to Olympic infrastructure, but they've made the list for another reason. They show uptake potential through affordability, transport access, and long-term growth corridors. I'll start with Tennyson. This suburb is more lifestyle-driven, but highly strategic. Tennyson is home to the Queensland Tennis Center and benefits from river proximity. Its limited supply and family appeal mean it could attract longer-term gentrification and high-income upgraders, particularly with Olympic exposure raising its profile. Next, we have Chandler. Chandler hosts the BMX and Velodrome Olympic venues and has large lots and prestige appeal. While turnover is low, that's exactly what supports long-term scarcity. It's a hold for growth play rather than yield, and ideal for those who want to position ahead of lifestyle-focused urban sprawl. Then I also have Belmont on this list. Belmont is one of the lowest priced bayside suburbs with access to Olympic infrastructure corridors. Chandler, Kapalaba, Redlands, growth outlook is modest now, but affordability plus location make it a smart medium-term buy for investors or owner-occupiers looking for upside. And rounding out the list is Bundamba. Now this is a bit further out, but the data shows some good early momentum. Listings are turning over and there's rising inquiry, especially from first home buyers. You've got Ipswich train access, affordable homes, and that classic outer ring pattern where growth ripples out from the city. Worth keeping on the radar. So that rounds out the 12 long-term suburbs I've identified. The key takeaway here is this. Olympic infrastructure might spotlight these suburbs, but it's the convergence of affordability, transport access, and civic renewal that's setting their trajectory. If prices do climb past the $1 million mark in some of these areas by 2032, it won't be because of the games alone. It'll be because the underlying fundamentals were already there, and the Olympics simply accelerated what was already in motion. Now that we've rounded up the list of suburbs, I do want to mention that context also matters here. Looking globally, we've seen Olympic impacts vary widely. Sydney 2000 delivered 8 to 9% annualized growth in key suburbs. London 2012 produced modest short-term growth, but areas like Stratford experienced significant long-term uplift due to urban regeneration. Barcelona 1992 saw a 130% surge, but that came off a low base during a major reinvention of the city. Brisbane is already an established city, so don't expect a Barcelona-style spike. But like Stratford, suburbs tied to new housing, transport, and mixed-use precincts could quietly outperform over the next decade. Having said all of that, market timing still matters. Interest rates, affordability ceilings, and supply constraints will shape real outcomes. This isn't a boom on autopilot, but what's clear is this. The suburbs tied to confirmed infrastructures are where long-term confidence is building, especially where price-to-value ratios still make sense. If you want to build your own Olympic decade strategy, SuburbsFinder combines live demand-supply data, infrastructure mapping, and price pressure indicators to help you find suburbs aligned to your goals. I have left a link in the bio for a free trial, so you can give it a go. See you in the next one.